I've been seeing a lot of complaints about Fidelity closing various accounts or freezing accounts. Um, and Somebody posted this article or newsletter, blog article about the problem. It says glitch plague spreads from Chase to Fidelity and others. A glitch seems to be a security hole in the bank's platform, which allows people to steal money from the bank. So here they talk about fraudsters that love money glitches, and it talks about check fraud. Check fraud has been a problem for decades and decades and decades and decades. I used to read about it in the Perry Mason books from the 1950s and 1960s. And the means of check fraud back then was to get a blank check and then forge the signature. Other forms of check fraud would be to take, if the payment amount is, say, $10, then change it to something like $110. That's not necessarily easy to do, but there were people that did that. So we have modern check fraud now. So there's a thing called the viral infinite Chase money glitch. It wasn't a glitch, but a check fraud scheme that involved depositing fake checks into ATM machines and quickly wire transferring the money before the checks would be returned. So I guess the idea is you open an account and then you create a check. I'm not sure how that's done. Maybe you get a blank check and fill in some information on it. You put it into the ATM machines, and the ATM machines have an instant cashback feature, so then you transfer the money out before the checks clear. Chase quickly closed that exploit within a few days, and the viral trend died. However, this week fraudsters have discovered a new target to attack, Fidelity, and their check fraud scheme seems suspiciously similar. So this report talks about discussions on social media, who dropping in Fidelity 5K hits. I assume this means that somebody used this exploit to get $5,000 from Fidelity. Here's another one. So this person did an analysis on this on social media, and it appears that the approach is to do mobile deposits. So you open a new account, you do a mobile deposit. It appears taking a picture of the check. I have done depositing of checks via app for a long time, and it is very convenient, but there are security mechanisms in the physical checks. Your phone only takes a picture of it, so a person would not be able to examine the check visually and by hand, so they might not be able to catch whether the security details are in the check. It says this scheme proved lucrative because Fidelity had mobile deposit limits of $100,000 on cash management accounts. This particular bank, Regions Bank, they reported $135 million in losses due to check fraud. So this is a really, really big deal as Fidelity. Fidelity is an absolute monster. And I think they have assets either under management or that is with them on the order of trillions of dollars. Regions reported that every bank was being hit with check fraud and that they were not being singled out. I have two relatives that were hit with check fraud. One of them put a bill payment in the mail, and it looks like the letter, or the letter was stolen, and somebody did check washing. Check washing is when you remove the ink for the amount and the payee, and then you fill in your own amount and payee and pay it to yourself, and then you create a new account, deposit money in it, and then once it clears, you take the money out. So I had one relative got hit for low 5 digits and one that got hit for high 5 digits. In both cases, they were made whole, which means the bank ate the loss, or one of the banks ate the loss. You have the bank that it was deposited in and the bank that it was withdrawn from. In this case, the relatives didn't follow their checking accounts closely. What I do is I get a text and an email for every withdrawal from my bank and credit card accounts. So it means a lot of emails, it means a lot of text messages, but if somebody does commit fraud on one of my accounts, I will know about it in time to contact them so that the bank doesn't lose out. The other issue with getting hit by this is the bank. The bank can freeze your account. In the case of a credit card, they will immediately shut down your account and mail you a new card. That's all fine, but being without a credit card for a week can be quite a headache if you use your credit card quite a bit, which most people do these days. So I have 2 credit cards, and this has only happened to me a couple of times, maybe 3 or 4 times in the past 20 years. But it does happen. Credit cards are a lot more secure than checks. Checks are inherently insecure because it uses paper and ink, and the mobile deposits aren't as secure as physical paper checks. Some places recommend that if you want to do a deposit, you bring a physical paper check into the bank so that they can examine it. That works for a bank, though. It doesn't work for Fidelity because they have branch offices, but I don't think you can deposit checks there. They're kind of a quasi bank. It also, a lot of people opened up Fidelity cash management accounts because a lot of banks don't pay interest on their checking account. So if you have the money in a cash management account and use it for checking, your money makes interest as opposed to sitting in a checking account not making interest. And I can understand that. My personal feeling is when it comes to financial stuff, I always have a backup. So if you have a checking account, maybe have 2 checking accounts at separate banks. There's always the possibility that one bank may have problems, or they might go down, or they might close your account or freeze your account, and you need to pay bills in the meantime. So having a second account can help. A lot of the Fidelity customers are having problems with this because they make a deposit into their Fidelity cash management account and then try to pay bills with it. And if your account gets frozen, then you can't pay your bills. If you also have a regular bank account with enough money, then you can just pay the bills from that. I only have one checking account, but I could always have, I guess, one of our kids make the payment for us. I do have multiple credit cards. I have two credit cards, so if one gets frozen, they have access to the other. And I have three brokerage accounts, so if I lose access to one, I can use another for trading. So anyway, bring me your Fidelity. Let's make some bag. So this is an interesting case where Fidelity is now suspicious of new accounts, but this appears to be a scam where somebody has a Fidelity account that's been open for a while, and I guess that's what aged means. And they do this fraud for a 50-50 split. Definitely suspicious to me. I have no doubt that this actually happens, but you risk going to jail if you're caught for this type of fraud. I have a very hard time understanding why someone would take this risk with the Fidelity account, because if you have a Fidelity account, you're probably reasonably well off. But I guess the idea is you scam Fidelity, maybe your account gets frozen because they think somebody else committed the fraud, and then they restore your account. I'd have to think you'd have to be pretty desperate to try something like this. So what has Fidelity done in response? Well, Fidelity's reportedly dropped their mobile limits from $100,000 to $1,000. I guess if you depended on Fidelity to make relatively large mobile withdrawals, this could be a real problem. In a Reddit post yesterday, one user reported that Fidelity rep intimated that this probably has something to do with the Chase check fraud cases. Customers report that mobile limits have dropped from 100,000 to 1,000, making them unable to deposit larger checks. So, $1,000 to some people is a huge amount of money, and to other people it's a tiny amount of money. Have I ever deposited a $100,000 check? Actually, yes. If you are putting a down payment on a house, if you're changing brokers, if you have a stock options payout, you could have a check in six figures. I would say in general that it's rare, but it does happen. Some other things would be an insurance settlement or a lawsuit settlement, and I've actually seen cases that reported on Reddit. But the vast majority of the checks that I receive are under $100, I guess. I have a company that sends me dividend checks in paper form, and those are, I think, like $60. And other small checks. Sometimes you get a rebate for something, typically under $100. So I don't think this is unreasonable unless you get these on a regular basis. Is it possible? I mean, if you're a landlord, yeah, you probably get checks of maybe $1,000 to $3,000 a month. I can definitely see that, and this would be an absolute headache. But if I got these in paper form, what I would do is I'd have a local bank account, and I'd bring the physical paper checks into the bank and deposit them. I guess I wouldn't use the mobile app. So this could be a headache, and the case I saw on Fidelity yesterday was somebody that had gotten an insurance settlement for $20,000. They deposited it into their account, and then once it cleared, they wanted to pay bills with it, and then Fidelity blocked their account. While many customers have had their mobile limits dropped, not all customers are reporting the same issue, so the limit line may have been more targeted. So this guy's limit is 500K. Some people have dropped it to 1,000. Fidelity has people with like 10 million up to probably hundreds of millions of dollars. Sorry. They have customers with 10 million. They probably have some number of customers with hundreds of millions at Fidelity. If you're in that category, a lot of this stuff probably doesn't apply. I do not know what their asset requirements are. Fidelity, if you have over a certain amount of money, Fidelity will give you free TurboTax Premier every year. They may give you other little perks here and there. Nobody knows what the limits are to get these perks, but they do exist. And it's possible that there is some limit where they look at you more suspiciously. I imagine the amount of time that you've been a customer is a factor as well. And I'm pointing this out for Fidelity, but I believe this applies to every financial institution these days. So I don't think it really matters. There's going to be a lot more scrutiny at banks and financial institutions in general, because it seems like a lot of these types of places are getting hit. Fidelity dropped their limits may have worked on Telegram. Conversations have immediately shifted to, well, let's try other banks. So people are reporting this on Facebook. Yeah. Fraud expert at Proof thinks this will not end soon. It's a wake-up call to improve security. Maybe they need to do something about checks. Checks are inherently insecure, and I don't know what a good fix is, but the solution may be just to require people to go into the physical branch to deposit checks, or have some other secure way to do it. This is one that I like. This morning, a post on a Reddit group says it all. Fidelity dead. Open a Charles Schwab account and hit me up 50-50. So they're moving on to Schwab. I suspect they'll move on to E-Trade and the other big brokerages. The fraud stuff is really crazy. I guess I shouldn't be surprised. People are basically using social media to spread to other people how to do fraud, and I'm kind of disappointed in society, but that's the world we live in today.